Well, if there's any takeaway so far for investors this year, it's that we should expect the unexpected. Just in the last week, we saw news out of Venezuela. We saw the geopolitical risks and concerns spread to Cuba, to Colombia, Iran, and Greenland. These are things that we're going to have to grapple with here in the coming weeks and perhaps months. At home, we've received a reminder that this is a midterm election year. We've seen a number of announcements in the last few days that are targeted at this affordability issue or lack thereof here in the US. Just to name a couple of things that caught my attention. Number one, President Trump announced he proposed a ban on institutional purchases of single family homes in the US. So right now, large institutional managers are purchasing homes. They account for just about 2.5% of single family home purchases here in the US, but he's proposing that they stop altogether, that we ban them. And because this is driving up prices, it's driving up increasing demand of single family homes and making it that much harder for individual home buyers. Staying on that housing theme, we also saw an announcement, and it was an order by President Trump for the government-sponsored entities, Fannie Mae and Freddie Mac, to purchase $200 billion of mortgage bonds. Again, really aimed at improving affordability and driving down mortgage rates. We'll see if ultimately, to what extent this actually helps alleviate those costs on potential home buyers. But this is, again, just playing on that theme of this is a midterm election year. We know that housing has been a problem. Let's see what we can do to help home buyers in this market. And then just in the last 24 hours, we received news that the Federal Reserve received a subpoena from the Department of Justice and is being investigated for the remodel of the Federal Reserve building. Now, this is largely seen as politically motivated, and Chairman Jay Powell, who has really been quiet and has taken the high road here over the last several months, as we've seen signs of pressure from the White House, from the Trump administration on the Federal Reserve. He actually came out with a 2-minute video and said, look, this is not about this remodel. This is about on what is actually the right course of monetary policy and not caving into the political demands within the White House. And so this is a really interesting setup. We have not seen much like this in the past. And so we're seeing Chair Jerome Powell really push back on this. I will just note his term expires in May. He only has 3 meetings left as Fed chair. So you wonder if this is really worth it. But I think it just gets to this broader theme of doing what can be done to help drive down interest rates, to stimulate the economy, support the housing market. So this is really, really exciting. And as I said, look, we should expect the unexpected. For now, we're going to focus on the data. And I think that's so important that we don't know what headline is going to come out next. As investors, let's focus on what actually drives long-term stock performance, and that is earnings. And so coincidentally, we have a kickoff of earnings season this week. It starts as usual with the financial companies. By the end of this week, about a third of financial companies in the S&P 500 will have reported earnings. This is really important. I always say earnings season is important. Every quarter, it's on the radar of investors. This one certainly is as well. And that's because we want to hear from management how they are approaching concerns around tariffs, around artificial intelligence, other geopolitical concerns. What are their hiring plans? What are they seeing when it comes to consumption and demand from households? So it's really, really important. But we also know that after a few really strong years of returns in the S&P 500 and equity markets in general, valuations are quite elevated. And so we need earnings to continue to grow to justify these valuations and drive stocks higher from here. For the quarter, on a year-over-year basis, we're looking at the S&P 500 delivering earnings growth of about 7 or 8%, and that would be quite good. I would not be surprised to see the actual results come in quite a bit higher, just because we've seen that over the last several quarters. We've seen that these companies continue to beat expectations, and I think that's been one of the things that's been helping to drive stocks higher in recent months is that we're always on guard around earnings season, and these companies just leaping that hurdle, that earnings hurdle, and really delivering on what we think are actually pretty good expectations. They end up surpassing them quite handily. I'll leave it there for right now. I'll look forward to talking to you next time. If you have any questions, please feel free to reach out to your financial advisor.